3 updated predictions of the Singapore residential market.
So we're going to be oracles today.
Number 1, my prediction is that the private residential market, right, will not move up much. And the reason being, right, is that with the most recent cooling measure last year in December, right, the direction, right, of our government is to make sure that the residential property prices stabilize.
I mean, let's put a very logical hat. Yeah, if the new launches today is going to sell at 2,000 PSF at Lentor Ang Mo Kio area and 2,300 PSF in like Farrer Park area, but yet in the resale market for like to buy a unit in Dhoby Ghaut, let's say at Sophia Hills, is like 2,000, low 2,000 PSF in the resale market, and that project is still relatively new, right? It will be like 2017, 2018,
roughly around
there. Still relatively new, right? And still also a very nice distribution between 1, 2, 3, 4 bedders as well, right? I would say that it's going to be challenging, right, for the OCR and RCR region to really go past this core city region price point. And therefore, I think it's very bold decision that prediction that we're going to make is that I feel that the property market, especially the new launches that you're buying today, will likely stay stagnant in the next 3 to 5 years to come.
So what you're trying to say, right, is that the price point between the CCR and RCR is too close?
I think
OCR
way too close. I think it's very different environment from, let's say, 2017, 2018, even 2019 when the OCR was like 1,100 PSF, 1,200 PSF, right? And then we are looking at the core city regions at 2,000 PSF. I mean, that's like a 40% price difference.
I 100% agree with you. And on top of that, right, like what I mentioned is that since there was a cooling measure in last year December, right, it means that the price is around there, is about the price point, right, that is acceptable. And hence, right, it shouldn't be going up too much.
Yeah, but the craziest thing is this. My prediction as well is that the next few new launches will do well.
Wow! Why?
It's crazy, right?
Yes.
Because I think that now the supply market, that means the supply of new launches in the market, right, it's just too few already. You're gonna go and buy, let's say, a new launch today, you'll just be brought to the same showroom over and over again. And guess what? Most of them are like 98% sold or something like that. So there's just not much in the market to buy. Because there's not much in the market to buy, people just flock to what is going to be what's the newest thing in the market. But the thing is this, right? Even if you have a very good sales volume for new launches, that does not equate to you making money.
I 100% agree. Yeah. Because the key is actually to think about what's going to happen like 5 years down the road, right? Our exit strategy, right?
So unless you think that the OCR region is going to make, or it's going to be more expensive than projects in like Orchard Road and Dhoby Ghaut and whatever River Valley and things like that, unless you really feel strongly about that you think that the OCR region is supposed to be more expensive than core city region. If not, then I think it's likely not going to happen, and therefore I dare to say it's going to stagnate.
So with this prediction, right, let me share with you my prediction about what we should be doing.
Okay.
Number 1, find projects, right, or find units itself, right, that have relatively higher rental yield. Because if we are not able to benefit from the capital appreciation of the property, right, another way that we can make from property investment itself, right, is to make from the rental yield. And because of this, right, with leverage itself, right, we are able to hedge our properties, our assets, right, against inflation also.
Yeah, totally agree as well. But if you don't mind, we just make one more bold prediction, something that's very interesting.
Sure.
Yeah. I personally feel that the biggest gains will be in the 4 and 5 bedrooms in the near future.
Why?
Because if I look at what is the next asset class, which is actually landed properties, landed property prices have gone up so much in the last 1.5 to 2 years. The only way to look at this, right, is that to buy a landed property with 5 bedrooms, it's probably going to cost you like 5 to 6 million upwards. And therefore, if you manage to find any 5 bedrooms that's like 2+ million, actually think about it, that is pretty much the next asset class that most people go to, right? If they need space. And therefore, if there's the next asset class at 5 to 6 million and of course your 5 bedrooms at 2+ million, I think that's going to be quite popular moving forward.
I agree with you, and one of the reasons is also again total debt and servicing ratio.
That's true.
TDSR.
Yeah, affordability. Yeah.
Yeah, so with the landed being at like 5-6 million, right? Think about the amount that of like income that you need to have, right, to qualify for the loan itself.
Exactly.
So obviously it'll be easier to qualify for a loan that's 2+ million rather than a $5-6 million.
Exactly,
property.
right? Yeah. So that's one thing, right? And of course, once again, with TDSR in mind as well, obviously that is where the resale one bedrooms are going to be popular as well, because if they are largely going to be 700k, 800k range, using one person income, all right?
Why is it one
easier to
person's
afford.
income?
Because I don't think anyone will want to use two names to stuck in the one bedroom condominium, right? Because that's basically then where do the person stay? Where do this couple stay or this family stay?
Basically, you're saying that if you're a couple, right, a married couple, one of them will be buying a property to stay,
Yes.
and the other couple will be buying
Largely.
a one-bedroom unit
Largely,
for investment.
Yes, largely, yes. And therefore, if you want to look at very small, so-called sized units, which is in a private scenario, it's either 1 or 2 bedroom. Yeah, and because of 1 and 2 bedroom, I think a 2 bedroom price points are generally still quite comparable to new launch market today in the resale market. But the 1 bedroom, I would say, is still a very, very big difference between the resale and new launches.
So let's summarize, right? What have we shared about the predictions today? One, what did we share?
Number one, we think that the new launch market will likely stagnant in price point in the next 3 to 5 years to come, because the OCI and RCI region is really outbeating the core city region's resale market.
Number two, find units, right, with potentially high rental yield.
Yep, high rental yield. And of course, we also want to look at bigger units that are very affordable. So if there's family that's willing to use 2 names to buy something, you largely look at the 4 bedroom and 5 bedrooms, because landed properties are getting very high in price point, very tough to afford. But they still need space, given this whole pandemic and how it changed our family's so-called livability. You want to have bigger space. So I think the popularity of 4 and 5 bedrooms will go up, and therefore price will likely go up for that asset class as well.
Last but not least, right, make sure that you look out for resale low quantum 1 bedroom units, okay?
Yes, exactly. Yeah. So hope that you guys enjoyed some of our predictions, okay? And go and take advantage of it, right?
See you.
Bye.